Good morning. We're going to be doing another session here. I'm going to leave you unmuted here since you're the only one in here this morning. Um, yeah, do another session here where we talk. Oh, let me get another guy in here. Um, how we relate. So yeah, I am going to mute this for the background noise.
Well, we got
The conference is now in presentation mode.
All right, if you guys would use the chat box that way, just kind of get all the background noise out. So yeah, we're going to talk again today about really applying the Elliott Wave structure to the emotional structure, okay, the emotional market cycle, in any time frame, really, in any time frame, and that's why. Let's see. Okay, this Elliott wave formation here. Why my mouse is so blinky there? I'm not sure. But this Elliott wave formation that we're seeing over and over in the market, and the fact that it duplicates itself throughout every time frame, it really started to show me that it's a repetitive emotional pattern. Really, it's the same thing that's playing out here, except it's not going all the way. Because when we have a bullish market or even a bearish market, like we'll get that wave set, but the retracement point or where it stops is kind of what separates it. Like when the complete market cycle is over and the whole grand wave has finished, we'll see the whole thing. But as we go and we make those legs up in those grand waves, we're going to be seeing these individual emotions that'll repeat themselves on these little waves here and on this big wave here and now on this entire structure here. It's just the same. It's like the same patterns of emotions and impatience of traders and lack of discipline and all the same wrong decisions that people are making, that kind of reflect all throughout different time frames. And that's why I found it pretty interesting that it makes sense that it's an emotional structure. Okay, because especially how we find our trades in here, by using the Fibonacci tool. Like we're measuring a move like this and measuring where to get in, or measuring a whole 1 and a 2 move like this and thinking about where to get in, or even measuring the entire move and thinking about where to get in, and how it completely falls to these retracement points that we can measure with a Fibonacci tool, over and over again, regardless of what time frame that we're in. It really started to show me that this is just that's when this really started making more sense to me. That okay, the market's unfolding in these predictable waves, impulse and retrace, and impulse and retrace, and then a larger retrace. And it really occurred to me that if you don't know that those waves are coming and how they're unfolding, you're kind of throwing your money into the wind. You don't really know how to trade it. If you don't know the structure and the geometry that the market is going to form, you're just kind of blindly going into your trade. And so it really made sense to me, because if you don't understand this structure and you're just kind of trading from the normal, trading standpoint, where you see things start to move and you throw your money at them and then they come back down and you get shook out, or you get stopped out or whatever. Those kind of things are happening because the market's playing out in the same flow, the same ebb and flow over and over and over again. And you're most likely going to be making those same decisions over and over again. So, when you put those things together, how the market unfolds in this geometry, and that this is really the emotions that are going through the traders' minds, or the 90% of people's minds when they trade, then it really started to click that, okay, this is repeating itself time and time again as a fractal within a fractal within a fractal, because human consciousness is just experiencing the same emotions over and over again. Like there's no real discipline there, and like a lot of people that trade, you know, people that trade, there's like two different kinds of traders. There's traders that will be in this for like the long haul, kind of like where they really want to have like a discipline in it, and they really want to understand the market and be able to extract money out of the market whenever they want. Okay, and then you have other traders who see this as like an opportunity to get rich quick, you know, and which it, you know, if it can be, obviously there's tons of money to be made in the market, but if you don't have a good strategy and discipline and understand the way the market's moving, there's just as much money to be lost in the market. So the reality is that the market is just always chewing people up and spitting them out. And you know, if it was the same people playing the game all the time, then you know they would kind of, you'd probably see more people winning because people would get, you know, used to how the game's, you know, being played. But the thing with trading is that, you know, there's always new people coming in, and there's always, you know, people that jump from one market to the next, and 90% of those people really don't know what they're doing. So you have a situation where, you know, this thing just keeps repeating itself, especially in cryptocurrency, guys, because there's no barrier to entry. You know, there's really no barrier. You just can get a little bit of Bitcoin, sign up with an email address, and shoot it over to the exchange, and you know, before you know it, you're chasing the pump. You know, whatever is getting, you know, pushed on Poloniex or Bittrex or wherever you're trading. So being aware of how the market's going to unfold like this in every time frame really starts to, you know, give you more opportunities to gain. It really does. Gives you more opportunities to gain. So we're going to find that same emotional structure, and I'm going to use XMR as a really good example here again because it's just so really nice and textbook here. I'm going to pull it to the middle of my screen here. Okay. So in every time frame, you know, we're gonna, I bet you, like, let's look at this little leg in XMR right here on like a 5-minute. Okay. So, you know, how you trade, your own trading style definitely will you'll kind of decide what windows of time you want to trade in. Like, I like to trade bigger swings, but you can use this, using this strategy on high leverage on like a 5-minute chart really works out really well too. Let's just pull this back here real quick, guys, back to our green box. I want to analyze this small little 5-minute wave that, so that's the trouble when you try to pull these charts back in lower time frames. There's just so much data. So much data. Come on, a little bit further. There we go. All right. Come on. Okay. So when you see the market impulse and break out, okay, you're going to get little waves. Now this first one was just like the just market buys, bought this thing right out of here. But you can see as this thing starts to unfold, even on the 5-minute chart where it breaks out here, you get impulses, retrace, impulse, retrace, impulse, and then you get a larger retracement of that move. Okay, and then in here you get another impulse, retrace, impulse, retrace, impulse. And even in this, like, it's kind of crazy, but even if you were to look at the 1-minute chart, or even you can see here in the 5-minute, but just this little impulsive leg up right here even has a 1, 2, 3, 4, 5. Okay, now it's really interesting because you can play this in any time frame. Like if you're trading, I mean, you could trade this on margin, but just these little moves like this, you know, if you, it's from here to here, that's what, like 12%. You know, if you're trading that 12% in what, like 4 hours. So if you're trading that on margin, I think with Monero you can do, I think on contracts 33 times leverage or at least 20 times leverage. You know, these are good trades that you can pull out of just these small little impulsive moves by understanding that out of your whole wave count. You know, remember we're looking at a 5-minute chart here. So on our higher time frame, what we were looking at is these sub-minute waves. Okay, like this is our sub-minute waves of our higher time frame that we were looking at. But now we can see even within these waves, there was waves within waves. Okay, So even playing this sub-minute, structure here on a smaller 5-minute time frame, you can pull the same Elliott Wave strategy trades out of it. Even in this leg up, this fifth leg up here, we still have a 1, 2, 3, 4, 5, and even in this little fifth leg, it has an impulsive 1, 2, 3, 4, 5. So it's repeating itself time and time again, and that's really because it's the same attitude that the traders have towards it. The price will go up, they'll chase it a little bit. Come on, load it up for me. Sorry guys, it's not loading here. There we go. So the price will go up. The traders will chase it, and then it will come back down. And if they don't understand that, what kind of move that they got in, then they're going to get wiped out as soon as it comes right back down. Now this is the same 1, 2, 3, 4, 5 wave that we just looked at on the 5-minute chart. And like I was saying, even in this little part right in here, this little bit right here, there was a 5 wave up that you could see on a 5-minute or a minute chart. Which is really interesting because these waves within waves, like right now we're looking at the hourly chart and we can see these, 1, 2, 3, 4, 5, this dotted line blue. Well, that would be our sub-minute wave that we just looked at in Monero right here. That's the same thing. But even deeper, like we just looked at this part right here on the 5-minute, and even deeper in it, there was Elliott Waves. Okay? So, when you start studying Elliott Waves, there's like 3 layers that they really discuss. They kind of number them. It depends on the example, but they sometimes number these like A, B, C, D, and they have like little Roman numerals and stuff like that too. That kind of is to clarify, okay, this is like, a sub-minute wave, this is a mid wave, this is a grand wave. To me, I don't get into all the differential, little numbers and stuff like that. I just basically recognize that it's the same wave structure in, whether it's a 5-minute or a 1-minute or an hour or monthly, it's the same wave structure. So that's what you really are going to be, trying to pick out of the market. And it usually will always come after an impulsive move. Like we'll get an impulsive move up, and then that retrace is going to come. And that retrace usually will be, 50, 61%, maybe 38%, depending on how bullish the market is. And then after that, boom, we get another impulsive wave up. So just understanding that the market's going to move in this staircase fashion opens up a lot of doors for opportunities to trade, because you're understanding that the market, like it must be because the way that human psychology works is that, well, things don't always, things go up, they don't just shoot right up to the moon. And I think that that's the biggest mistake of a lot of traders. And I even noticed that with some of the guys on the signals list. If I give a signal and I say let's get in, let's say here at a number 2 point, and the price goes here and then it comes back down here a little bit, people will be like, oh, is the trade still good? Or maybe they bought it too late and then it comes back down to the entry and they got in and out, and they say, oh, is there something wrong with this trade or something? And it's just because people don't understand that things don't just go to the moon. You know what I mean? Like just because the price broke out here for Monero, yes, it initiated a new market cycle, and Monero is most likely going to make a new all-time high. But is it going to happen off of this move? No. No, it's not going to happen off of this move. Is it going to happen off of this move right here? No. It's not going to happen off of that move either. So, that's where, and I've experienced it for a while too, where, you do your analyzation of the market. You say, okay, this is a bullish market. This thing looks like it's going up. And then you jump in, but then you jump in at the wrong time and you wind up losing money. And then the market turns back around and goes the way that you thought. And that's why, probably because you had wrong expectations of what the market was going to do at the time that you got in it. Like if you understood the ebbs and the flows of the market, then you would be choosing strategically your entries to get in when everybody else is selling it down. And that's kind of my biggest thing. Like I really try not to buy markets when they're green. Oops, it's NMC. I try not to buy markets when they're green. I try to, if I understand that a market is going up, I buy it when it's red. I buy it when everybody else is getting shook out and it sells down and, people don't think it's going to go anywhere. And that same mentality of the trader, of impatience and, getting in at the wrong time and not thinking the market's going to go anywhere, it happens in every time frame. Okay, that's why we see the same structure repeat itself over and over. The same thing here. People chased it here. They got out here. They didn't think it was going anywhere. Here, once they see a break number one, oh, they chase it. Oh, okay, we got a breakout. And then it comes right to, stops them right back out. And then they don't expect that other wave to go. And then they chase the other wave and not even expect that there's a retracement of the whole move coming. So understanding your wave count and how the market's going to unflow in this Elliott wave fashion will save you a lot of headaches and bad trades. Really, that's why I only look for number 2 points to enter and number 4 points to enter when I'm looking at a bullish market, or even if I'm looking at a bearish market and this thing is flipped upside down and going down. Same thing. You're looking for that 2 and number 4 point to get in, because you understand the structure of the market. And what's really interesting is that this is going to this will repeat itself it's the same way, but on the way down. In the same way on the way down. Let's look at a good example of that, right? Let's look at Bitcoin here real quick. Okay. Now, let me remove my drawing tools here from my analysis and show you guys how we get the same, whether it's up or down, we get the same relative emotional, structure in the market. Okay. That's a good example right here. Now, when we talk about patterns and stuff like that in the later courses, you'll start to realize that a lot of these Elliott wave patterns that we play just turn into other traders' patterns that they look for. Okay, so basically, right here, when Bitcoin got tired up in this area, it started to sell down. Okay, and it sold down basically just like this. Okay, and this, what did it do? It did, well, a lot of traders that don't understand Elliott wave theory, they call this a bullish 3 drives down. Okay, the line is not in the right spot, sorry. Right about here. Okay, meaning that from the price falls off, let's zoom this in a little better. Okay, meaning the price falls off, and then it reaches a point, okay, right about here. It falls off and it reaches a point where it dumps down and then it comes right back up. Okay, now these are all this, like, just the way that we would play, same the way that we would play this on the way up. Okay, if we're looking at it for an Elliott wave on the way up, we're looking to get in our number 2 and our number 4 points. And the way that we're playing those is by waiting for that first move to do what it's got to do, and then drawing a retracement of that and getting in at that number 2 point for the next wave. It's the same thing on the way down. Okay, that's why you see things that will rally back up like this, and then they'll come right back, and then they'll go right back down. And same way, so they move in the same fashion, where like you drop off, the price will go down, and then it will come right back up from this area to 61, 78.6, that area, and then boom, drop down again. And then if you look, what does the price do again? From this point here where it fell off, right about here to down here, boom, almost the same length down, okay, because we had a 1 wave down. Okay, and I'll read that question in a second. Sorry, I missed it, went away. And then we get the next wave down here, and then next wave down here. This wave here came back up also, 61%. Okay, now after that whole thing played out, we got a retracement of basically of the whole move. Now, mind you, this SEC action in here, that was not the normal, but we usually would get something like this. Back up to about this point. Okay, and all that really is just an upside down Elliott wave. That's just an upside down one of these. Okay, in a bearish market. Let me see what your question was right there. Let's see. Had trouble working out if we are approaching a number 2 point or that trade cycle is over as with DCR. Yeah, what happens, sometimes what happens with our Elliott Waves is that we don't know what they're going to, I mean, obviously we don't know what they're going to produce for us until they produce it, you know? Meaning that a lot of the time what will happen is if you're studying a market, like for instance, let's go to DCR because it is a good example of that, where when we played this, we were playing the Elliott wave that was let's see, why is it all over here? There we go. When we played this, we were playing the Elliott wave that was at hand, like we playing what we saw. I'm gonna look at a higher time frame here for this, guys. Okay. What we saw unfolding with Decred when we were playing it back here was Elliott wave structure, okay? Now, the thing with Elliott waves is you got to take a couple of things into consideration. That you don't ever know how big the wave's going to wind up being. Like when it's all done, you'll wind up probably having something like this. Okay, but we don't know where we are in this leg. And like we don't know how far this thing's going to push. We just know that as it unfolds, it's going to unfold in little mini sections like this and the same repetitive pattern over and over again. And sometimes what winds up happening is that when you play this, like when we played this played for us as like a 1, 2, 3, 4, 5, an A, B, C correction. Then we went into another, 1, 2, larger 3, 4, 5, and then a big A, B, C correction down here. And so we were expecting that this was going to be a 1, 2, 3, 4, and we were going to get a 5 out of it. But what happened is that 5 just exploded into its own Elliott wave, basically. And what we wound up playing was just the ramp. All right, like it was just the ramp. So it's kind of like when you look at some old Bitcoin charts, and it kind of shows you that the market is always kind of ebb and flowing in this Elliott wave formation. It's kind of just doing the impulse, the retrace, the impulse, the retrace, the impulse, and then retrace of the whole move. And how bullish or bearish the market is, or how far along it is in its market cycle, will determine how far that wave is going to go. Like we played this whole thing in here just expecting a fifth wave that was going to, we get out of this thing at we get in at 175, we get out at like 420, 450, and it seemed like a good exit. When it went to here, it was like, all right, cool. We went a little bit further than we thought, but then this move right here, this entire move, this was not. There was no telling that was going to happen. This whole thing didn't go into an ABC retracement. It defied the ABC retracement. So that's what I'm saying. Like when you play the Elliott wave theory, it's going to work for you until it doesn't work. And then when it doesn't work, it shows you, oh, whoa, this is actually going further. It's kind of like what happened with me on Bitcoin. I was expecting it to really get that deep ABC retracement off of that China move, and it didn't. So kind of same way here, we have our 1, 2, 3, 4, and we have that fifth leg up, and we were expecting something like this to happen. And if it come down and give us an ABC retracement, and it didn't. So at this point right here, it defied the ABC retracement, and it just took off on its own. So when that happens, you're just kind of left to let the market do what's going to do, and then analyze it and say, whoa, okay, well, these moves that I played, these were good. I extracted profit from them. But now let me look at this whole thing on a bigger time frame. That's kind of what you have to do at that point. You have to scope it out. And that's what I was saying the other day when I was talking about Ethereum and a lot of these coins that we're looking at now, how when we played these waves and these moves, these were huge moves in their relative time frame. I mean, we were looking at the chart like this for over a month. I remember that this was the way that we looked at Decred when we looked at it. We were looking at the chart like this. But when these bigger moves expand into other price zones, you're left to be like, oh, I got to scrunch the chart down here. And I'm left with that whole move that I played was just a ramp. So, how pretty these things, wind up and how exact this structure is going to be, you really don't know until it's all over. So that's why, I have two kind of strategies that I use. My first strategy is identifying the new market cycle. Okay, and obviously that kind of a strategy doesn't work for new coins like Decred. Okay, because when we look, my biggest thing is like I'll come in and I'll look at a chart, and if I think it has a new market cycle that's beginning, I'll look at all the old past, the previous market cycle, the resistance that was broke, and I'll look at it on like a weekly or a monthly or high time frame, and I'll look for the stochastic RSI strength on like a high time frame. Okay. Now this we knew in here that this weekly stochastic RSI was strong, and that was really the only indication. Actually, it was right about here. We had this weekly crossover of this stochastic RSI. That weekly crossover was like really the only indication that this thing had enough strength to do that. Really. And if you overlook that and you miss that, then that's your only clue. Honestly, at this point right here, where this thing took off, was on this weekly crossover of the stochastic RSI strength. So if you were paying attention and saw that weekly strength crossed, then it kind of gives you an indication, whoa, this could have enough strength for a larger move. But when you're looking at new coins like this, when there's not enough chart history to kind of plot, what's already happened and how you would have a new market cycle, you're left with very few clues. And this would have been the only one for Decred, was if you noticed on that first breakout where our signals got out right around here that was actually before it, in this first week, that stochastic RSI cross, if you would have took note of that, then that would have been a clue telling you, oh, okay, this market looks like it's getting stronger on a higher time frame. All right, but for new coins like that, it's really hard to know where they're going to go if you don't have a past to look, for reference. So that's why what we played back here was just the ramp. Like there was Elliott Waves in here, in all this ramp formation. It wasn't as clean and continuous and perfect like this, but those Elliott Waves were in here. We played them, on this way up. I'm not sure how long most of you guys are. There's only a couple of you guys here right now, but the signals early on a couple months ago, we played this wave. We played this wave on the way up. We caught this. So there was really no indication this was going to continue until it defied that ABC retracement that we were looking for our previous wave count. Okay, it's kind of like Bitcoin here. All right. So that's what I was like. Elliott Waves can be confusing. I won't lie, they can be confusing, but you have to just realize that no matter what time frame you're looking at, the market's going to unfold in the same. Like we could be looking at just a small little, bull run on an ABC correction. Meaning, if we have an ABC correction, like right here, is a perfect example. If we have an ABC correction like this, where it's like sells off, back up, and then sells back down, I can almost guarantee you that this little A to B run, this fake out bull run here before it sold down more, in here the market most likely impulsed in this fashion, okay, where it's tried to make some waves up and maybe did a whole 1, 2, 3, 4, 5 up and then dumped down lower than it started. So it's the same structure though. It's the same repetitive emotions of traders, okay, like that will that will make those patterns happen, because people will buy. It's kind of like the way that I kind of made sense of it was that when you get something like this and you have the typical 1, 2, 3, 4, 5, all right, the reason it's unfolding like this is, and I can almost guarantee if we were to pull up this little section of this fake bull run, just meaning this right here, because this wasn't a true Elliott wave that led into anything else. It was part of an ABC retracement. But in here, I'm sure the market impulsed up. The way that it made that bull run up, that leg up in the middle, was most likely in this fashion. And it makes sense that it keeps repeating itself over and over again because of the level of how people are trading. Like how they're approaching their trades. They see it bounce or they break out, they chase it, and then it comes back down. They get shook out or they get lost, and then only the people that are waiting for that retracement right there are the ones that get into good spot. Or people that recognize, okay, this thing is moving up and are a little bit more patient, or buy the retracement, they get in there. And then if they don't take profit right away, they also lose money. And then by the time that this wave here happens, not many people are buying this one here expecting that fifth leg up. And so what happens most of the time is a lot of people will have sold the market and will have a stop loss right about here. And then when this one creeps up, that stop loss will get hit and help force more buys into the market for this next leg up. So the market's impulsing and retracing like this because of just the way that people are trading it. Like people see the market moving, oh, they buy it, and then the buyers run out of steam. It runs out of, it gets exhausted. And then the sellers start to step in, and then all the people that chased it, they lose money. And then the sellers start to lose money because it actually is, having an uptrend, or, will find some sort of support there. And then they sell it too low, and then it bounces back up. So you have, both buyers and sellers losing money on this same leg because they don't understand how it's gonna unfold. So, you don't really ever know how that Elliott wave is going to play out until it happens, really. Like we usually will get something like this as the standard form, where if it's going to continue, it should give a retracement of the whole move, where the traders will want to step back in again, the 78.6 or the 61, somewhere, like this, in this area, like this, or even like Bitcoin did all the way down to the 88, and actually Ethereum touched the 88 on the larger cycle. So anywhere in here is where you're looking. If you understand the market's going to continue up, you want to wait for that C point, which is really just a number 2 point of a larger move. Okay, like if this whole thing would be a 1 and then a 2. This isn't the same example I was looking at yesterday, sorry. Yeah, this whole thing would be a 1. The 1, 2, 3, 4, 5 up would be a 1, and then the ABC would be a 2 of a larger move. So it's really just understanding what you can get out of each move, and taking it for what it is. The only way that you can really have a clear affirmation that something big is coming, more than what you were looking at in the small waves, would be like what we saw with Monero, okay, and Ethereum. But Monero's a really nice example. Let's just get rid of all these drawing tools. Meaning that Monero, a lot of these older coins, cancel. A lot of these older coins, they have the chart history that shows you, all the pieces of the puzzle that you can put together. Meaning that this thing had a market cycle already in here, okay? And so we're expecting that once this, this downtrend line right here broke, that there's a bigger market cycle unfolding, because we have this previous one that we can say, okay, one cycle leads into another. We go through the disbelief, and then we go through all these emotions, and then we get the disbelief again. It's because these market cycles are repeating themselves. So, right in here, where, Monero had, disbelief the first time, as this starts to come back around here, it gets disbelief again, So, and just to point out, all of this is what happened with Dash, okay? All of this previous price discovery zone in here gets left behind and turns into just a flat line. And that's really important to understand with cryptocurrency, and the fact that the price of these coins is determined by the amount of money that trades them divided by the available supply. Meaning that as we go into the future, more people come into this, the supply is never going to get more. So by default, the prices of these things are going to go up, which is why cryptocurrency is actually very, very profitable to be traded, because you can trade it from, in and out, you can trade it from long swings, all sorts of stuff. But the end result is going to be the price getting higher the more people that come in. So when you look at something like this, though, and you have all of this action before, and then you see a market cycle like this happen, and then you see a breakout like this happen again, well, then it kind of gives you an idea that, okay, there's another one of these market cycles coming out of this, okay, out of this move that should be bigger than this one because they get bigger as they go. So whereas right here in Monero, let's look at it on the 12-hour and map it real quick. Whereas on the Monero's last market cycle, this is the thing to remember too, is that these will get bigger. Okay, these market cycles will get bigger. Right here, R1 and R2, basically like this, only showed itself on a 12-hour to be that big. Okay, whereas now it really seems like Monero's 1 and 2 of this next market cycle showed up a lot bigger on the chart. Okay, so as like right here we have the 1 and the 2 of this impulsive leg up. I really do believe, and according to the strategy that I use, is that we just saw a 1 and a 2 here with Monero. Okay, we still have to get the 3, the 4, and the 5 before we even start to sell down like this. And the indications for that are going to be that you have this market cycle that that got left behind, this resistance area that broke, and then when you start to look at like bigger pictures, stochastic RSI, time frames, strength, stuff like that. Our monthly is, if we keep pushing up here, our monthly is going to turn again and start to go up again. Now, this is one of the few coins that the monthly stochastic RSI is already kind of up here because we had this move here not that long ago. But when you start looking at a lot of these coins that are creating new market cycles, it really shows you that we're kind of just beginning. Okay, guys, like this is just the beginning. Like for instance, I want to show you guys XRP. All right, where is XRP? It's right in here somewhere. Sorry, I have it in here. Right here. Okay. Now, this is the monthly chart for XRP, guys. Okay. Let's just start real quick by looking at the market cycle that it broke. Now, this is a good example of how understanding Elliott Wave theory, you're going to kind of know what to look for. Okay, this is the same thing. Like we're looking at a big monthly chart here now from a big previous emotional bubble that happened here. Okay. Now, when this happened, it just stayed in downtrend for a long time, but eventually that red line is going to snap. And when that red line snaps, you get a new market cycle that comes. Okay? And I saw this red line snapping back, 3 weeks ago when I first put the signal out to the WhatsApp group that it was breaking here, and about 500 was a good entry on this because it broke this line. Okay? And there was a new market cycle that was going to begin for Ripple. But same way, so we don't know how that's going to unfold. We just understand that it's going to start its journey by impulsing and retracing in this kind of a way. But when we look at the bigger picture here, and then we look at the stochastic RSI strength, well, look at this, guys. Like this thing's just with this candle right here and this breakout. You have to understand this thing spent 670 days in a downtrend. All right, 670 days in a downtrend to the point where, it was common that people were calling this coin cripple because it wasn't going anywhere. It was like crippled and it just kept bleeding down. But it was the perfect recipe for something like this to spark out of it and create a new market cycle. All right, and that's, when people think coins, look at LTC, when people think coins are dead, they come back to life and they kind of haunt people that think that they were dead because eventually they're going to get a new cycle. All right. So out of this is the way that I analyze these things, guys. Is that I look for high time frame changes. Okay? Like I'll roll through the charts and I'll look at these coins and say, okay, this one's where's it at in its market cycle? Like where is this at in this chart? Like how has this showed itself? And so I see on a higher time frame we had a large market cycle in the monthly, and then I'll consult the stochastic RSI strength and say, oh, okay, look, we're getting a crossover here. Like these are oscillating indicators. We're going to talk about the oscillating indicators later, but this is the golden one. Like this is like, it's kind of like telling you like on a higher time frame, or I use it for all time frames, but it's telling you like how much gas is in the tank for your journey in a sense, or how much wind is in your sails that can push you. You know, I mean, when you're looking at stochastic RSI strength crossing over like this on a high time frame after a breakout of a downtrend like this is an indication to me that okay, this thing is initiated a new market cycle. It's crossing over on the weekly strength. I'm sorry, on the monthly strength even. And it has a lot, if this thing's going to oscillate up and do a whole nother oscillation of, you know, strength, because this is a strength indicator telling you that when it's down here below the purple area, down in here, below 20, it's in the oversold conditions. And between 20 and 80 in the purple band is like normal trading conditions. And then up above 80 in this top area between 80 and 100, that's when the market kind of gets, that's when it's at its maximum strength or starts to get overbought. Okay, so when we look at this, just a simple quick glance, we can say it tells a lot. It tells us a lot when you understand what to look for. Okay, broke a downtrend, had a market cycle, stochastic RS strength is new, it's growing, it's getting stronger, it has the capability to oscillate all the way up here over the next coming months and get really to the point where the market is so strong again and so overbought, and then it would, you know, go down again, just the way these market cycles happen. Okay, so that's an indication right there. High time frame stochastic RSI strength is growing. You broke a downtrend from a previous market cycle. We're starting a new market cycle for this coin. This coin is going to start a new market cycle. And what does that mean? It means it's most likely going to make a new all-time high. All right. Now, mind you, like of course on the signal, we get into 500. I said the 2500 was the target. Well, that's based on previous price points. Okay, like I nailed that target because price has memory. Guys, like there's no, like you can't get away from that. It's not rocket science. Like if you just come through the charts and you come here to all these wicks and you start looking and saying, okay, all these wicks basically, look at all this for months right here. Let me just kind of go with this price right here. Nice round psychological number, 2500 or so. 2500 serves a very important psychological number for this coin several times, meaning that this month right here, it found resistance at that point. Okay, after it did its bubble, this month right here, it bounced off of that price point. This point right here, it went through it, but it came back up. Here, it basically bounced off of it. Here, it crashed through it. And here for 1, 2, almost 3 months, it couldn't beat 2,500. Okay? So logically, when this thing wants to break out, what's the first price area it's going to want to clear? 2,500. All right? It's gonna revisit that price zone, that expansion in price. It's going to revisit that because it has to clear that to be able to continue on. Now, I'm going to tell you guys right now that Ripple is not even close to being done. Okay, like this is definitely one that you would want to free roll coins and buy the dips on over the next several months. And so now that this thing did its little run up to 2,500 on the smaller time frames, we'll be looking for our Elliott wave formations and how we can play them on the retracements, stuff like that. Okay. So, and here, let's see if we can pull it out. Oh, okay. Now it looks to me that on our 4 hour here, that we just did a 1, 2, 3, 4, 5 to the target, basically. So, now mind you, this thing could get legs and keep running and do a whole wave within itself. So that's what I'm saying, your analysis will only work until it defies your retracement point. But I see that we got a 1, a 2, a 3, a 4. Basically, the 4 came all the way back down here and accumulated almost at the top of wave 1 there. And then bang, our 5. All right, just came out like that. So I'm expecting a retracement of this whole move, most likely as it oscillates in strength, So I'm expecting something, like this, maybe like that. But, we could very well not get this leg. Okay, now I'm going to tell you that right now. We could very well not get this leg, and we could be looking at that whole 1, 2, 3, 4 is just the ramp for something else to come out of this. So that's what I'm saying. Like, your analysis is going to work for you until it just doesn't work. and then you have to, reanalyze the market. At the end of the day, we don't know what the market's going to do. We just try to get the best read on it that we can and be prepared either way. Meaning that, we could very well be looking at this as a 1, 2, 3, 4, 5, like I just showed, or this whole 1 and a 2 and 3, 4 could have just turned into the ramp for this thing. Meaning that it could very well be doing something like this and come down and retrace here and then go up again and then come down and retrace and then go up again. So we just got to be, prepared either way, and know what to look for when those situations could arise. And the way that you would look at that is that you would kind of put a Fibonacci on this whole move that it made now, basically like from here to here, and kind of watch your retracement points that you're looking to get back in. Like I would look to get back on this thing around the 50% retracement, because sorry guys, cut me out for a quick little second there. I'll be looking for a retracement here around this 50% mark, right around here. Okay, around like 1450 or so. Now, whether it comes down and hits that retracement or not, I don't know. That's what we have to see. It looks to me like on the 4 hour, our strength is going down now. It could use an oscillation, and where people that don't understand the cycle are still buying this thing, and then it should bleed down lower. There's no reason to be buying it above 2,000 right now. So, and even on like, let's say it's already done that. Oh yeah. Yeah, exactly. So let's see. Yeah, well, this could be the beginning of our ABC retracement. Like, see, that's what I'm saying. Like each of these legs, this is an Elliott wave in itself. Even right here, this whole leg up, we got a 1, 2, 3, 4, and then bang, a 5. Now we could be getting the ABC retracement out of this move. Somehow I'm expecting like some sort of a retracement from this. Okay, whether it's like this, and then back down like this. Okay, but that's the thing. If this thing defies this retracement and makes a new high here, then we are looking at it where it's just made a 1 and a 2 of this impulsive leg up. So, like this was basically, okay, here we are here. Okay, now from this impulsive point right here, it could be doing this too. All right, and gearing up for another move. So that's why, you never really know, so you can kind of play it either way. And the way that I would play that is that if I watch this impulsive move come up here and this sell down right here and it's starting to bounce, maybe buy this spot at about 1,500. Maybe buy it, okay? Buy it, and then when we get to about here, put a stop loss at break even, or put a stop loss at like, at the 38% mark right around here. Because if this thing does want to do an ABC retracement and come down further, you get stopped out, break even, or maybe with a little bit of profit, and then you can assess it to get back in. But like I said, you really don't know. And like right now, we're expecting some sort of a ABC retracement. But if it doesn't do it and it just goes right up and continues a 1, 2, 3, 4, 5 of an impulse like this, then that's the sign. That's the sign for us that it defied this retracement point right here, because we're expecting some sort of a retracement from this thing. All right, basically from the top here, and then to come back down. So you just want to like I had mentioned before, when we play the impulsive side, the 1, 2, 3, 4, 5 up of the Elliott wave, it's a lot easier to tell, like, okay, this one impulse, this could be a number 1. Okay, this one is retracing, this could be a number 2. But when we get into a larger move that did a whole big move here, then you basically have to just wait it out on that correction side, and maybe buy that retracement point, just in case it does continue on. But then remember that, okay, I'm going to put a stop loss here at break even, or something, to protect yourself if you're wrong for 1 second. Okay, that's what I would do with that, and kind of that way you're kind of like prepared either way. We're expecting a larger retracement of this move on like the higher time frame, but if we don't get it, it will defy that retracement right there. So it's good to buy the retracement, on the first dip. That way you kind of have your seat, but don't maybe be expecting, okay, maybe this isn't going to continue. at this point. Okay. All right. So let me just load this up here. Sorry guys, it's taking a minute to load that 6-hour chart here. Let's try 4-hour. Okay. Alright. Okay, you know what guys, I have to go to the bathroom really quick, man. Just give me one or 2 minutes, I'll be right back. I apologize. Alright guys, I'm back. Sorry about that. There's no way I could have gone another half an hour without going to the bathroom. So yeah, we're looking at this, man, as yeah, you do want to keep that in mind. You know that the structure that you're looking at, that you're playing, could very well turn into a ramp for a larger move. Okay, now I don't think that this will just continue from here, because that's a big shot that it did. I mean, this doubled everybody's money basically from the breakout right here. Yeah, it doubled everybody's money. So it's going to be, you know, I'd be very surprised, I guess, at this point, if this thing decided to continue right now without at least tagging this line, you know, or even really, you know, making people bleed out and tagging down the top of here. So, you know, I don't buy these things when after they've done their impulse. I kind of will really step away, because that's a big problem I had for a while, is that I would play an impulsive move and then it would look like it's going to continue, and I would get back in because I'm like, oh yeah, this thing's going to continue, and then, you know, I got in the ABC retracement point, and which just kind of seems like what this thing is doing now. Like, what happens is after it runs up that much and we start to lose our strength on like our 4-hour, I bet you our 6 hours probably heading down as well. Let's see, yep, 6-hour crossing over here. So these, you know, these strength oscillators, they need to oscillate. Like they need to breathe a little bit. Now this thing is really strong on the monthly, so you know, you know, I do think it's going to go all the way, you know, to make a new all-time high. But I don't think that's going to happen right away. You know, I just don't think it's going to happen right away. But when we start looking at stuff like this, our 12-hour here is still very strong. Very strong. So as you trade this strategy, you know, I'll tell you from the beginning, it's just, the Elliott Wave theory is just a theory. You know, like there's no graph that you can overlay every single market and it's going to look perfect and line up for every trade every time. It's not, you know, like, but if you understand that the way that the market is unfolding in these ebbs and flows, and you play the moves for what they are, whether it's on the way down or whether it's the way up, and you say, okay, I'm going to get in this number 2 point, number 4 point, and this might be part of a larger wave that's unfolding. If you play that strategy, then you're extracting profits from these moves as they happen. And those little moves that you play can be very profitable. I mean, when we look at Monero again, these little moves in here, Monero does look like it's about to begin its third wave here, actually, now, guys. So I would expect something like at least that out of Monero. But when we look at these moves here in this first leg, you can see that there's plenty of opportunity to extract profit from this thing by understanding the way that the waves are going to unfold. Okay. Now, like I was mentioning yesterday, when it broke right here, you could have played two strategies. You could have played, all right, let me play this impulsive, moves as I see them unfold, and understand that there's a larger wave and a larger picture and a larger market cycle that's unfolding. Or let me just buy and hold. Let me just, there's a lot of people that use this strategy and they just recognize something like we just showed you on Ripple, or like I showed you here on Monero on the higher time frame. Like where that line broke and there's a new market cycle being initiated and we're having like that high time frame strength show itself. There's nothing wrong with just buying the market and holding it. Like literally, I have some Ripple that I bought when I sent that signal out 3 weeks ago. That I'm just going to hold as an experiment because I've sold a lot of it at 2,500, but I have some of it I'm just going to hold till that stochastic RSI on the monthly gets way overbought months from now, where maybe Ripple makes a new all-time high. Okay, kind of as the investment strategy. Sorry. So here, there's plenty of money to be made just playing extracting these waves, especially when you have high volume and you have that momentum, meaning that just between here and here, that's a 20% just about gain. Between here and here, again, about 20%. Now, if you got this number point and if you got that number 2 point here and you understood that there's a 5 wave set unfolding, then you hold through that number 4 sell off, and then you wait to sell up in here. Okay, and then even if you sold right here, talking 35, maybe even 40% if you get out the top there. Now that's a lot of money to be made on your money in what's that, like a few days, all right? Just a few less than a week. So that's why cryptocurrency is so profitable right now, especially trading this Elliott Waves strategy, because for you to make 40% on your money in a few days in stocks or foreign exchange, it's hard. It's really hard. Like there's a lot more risk for you to put on the table, a lot more risk, and a lot more chance to screw up. Honestly, like maybe you get in here, and then the price gets pushed way beyond your entry by some algorithm or some central bank that's running something on foreign exchange markets. So the foreign exchange markets are heavily manipulated, heavily rigged. And there's, algorithms that will push the price further than you can accept that loss, where other people can accept it. So cryptocurrency right now is the most profitable market to trade, guys, with the least amount of risk. I mean, we're talking moves where we can extract 20 to 40% profit within a few days on our money in a high volume market, meaning that, this is at least a couple thousand Bitcoin daily volume, all right, which is a couple, a couple millions of dollars, of daily volume. So, you can get your couple $1,000s in and out of there, or tens of thousands of dollars in and out of there in a couple days and make money on it more than you can in any other market right now, honestly. Like, the liquidity is here, the volume is here, the momentum is here, and the new flock of people coming into this is here. The more dumb money is coming in. So it's really profitable extracting money off of these waves, okay? Just understanding how this cycle is going to unfold. Like right now, everything breaks out. It basically breaks out, does its first little rally. It's basically like, right now, I would say that Ripple, for instance, just hit disbelief. It just rallied up and hit disbelief, and everybody's like, whoa. Because look, it came out of the depression. It did a little rally up, and bang. And everybody's like, oh, this is going to phase out like everything else. All the past, cripple, this coin goes nowhere. No. It just hit the disbelief point, okay? Like where it just rallied up and hit disbelief, and now it's going to, do a little bit of retracement, but it's going to continue on. It's going to do all of these emotions, and it's going to continue on all the way up till it makes a new all-time high. Because it's been initiated. It's been, that whole downtrend it was in for so long, eventually is going to break, and it's going to create a new uptrend. So these are the kind of things that you want to be aware of. You want to understand that when market cycles initiate and they start, they're going to come and they're going to unfold like this. Okay, whether you are playing, this is what I was mentioning yesterday, once they start, you don't know, that first impulsive move here, a Monero right here, that we played, right here. I didn't get this first point right here, but right here is where I told everybody to get in, is it was challenging the top of that wave, 125. Now, as we got in at that point, of course we didn't know that all of this was going to happen, but we kind of did know that there was a new market cycle that was going to happen. And that market cycle has to be bigger than the last one. Okay? It has to be, the next wave, the next grand wave that we're making is going to be bigger than the last grand wave. Okay? So we understood that we were getting in at a good spot here, but we didn't understand that it was just a sub-minute wave. It was just a sub-minute. I mean, and even like we just showed you, at the beginning of the session, these waves, when you look at them in a 5-minute, they have the same structure. Okay? So there's plenty of opportunity to use this strategy and to gain in any market, but just by understanding the wave count. So if you just understand the wave count and you just come to the market and you find any one of these places that you're in, whether it's on the way down or whether it's on the way up, and if you understand where you're at in your wave count, then you can make an educated decision on trade and say, okay, maybe I'm going to trade this with the momentum here as a day trade. And you spot a number 2 point on a chart and you say, okay, I'm going to day trade this on a 5-minute, or you spot a number 2 point on a larger time frame like we're looking at now with Monero. This is just a big 1 and a 2. Okay, that's all this thing did. It was a bigger high time frame, 1 and a 2. From right here to right here. That just did a 1 and a 2. And we're starting our third leg up. Now, we don't know how big this thing is going to get just yet, but we have an idea now. Now that it printed itself out on a higher time frame, and we can compare it to the last wave, we have an idea now. Okay? We see that our wave structure back here, drawing tools here. We see that our wave structure back here had an impulsive move right here. Okay? Right here, this impulsive move right here. In this area, we have an impulsive move here of a new market cycle right here. All right, but we can already tell this thing is going to be a monstrous bigger wave. Okay, to the point where when it's done, we'll probably have to pull the chart down like this as well. Pull the chart down like this to really understand what happened. And then we'll look back and we'll say, oh, okay, this thing, I mean, we're seeing it before it happens, guys. We're seeing it before it happens because we understand the geometry of the market. Like I don't have a crystal ball and I'm not pumping these coins. This is just full technical analysis. Sorry. But you guys see what I'm going for here. We're expecting a wave, 1, 2, 3, 4, 5 impulsive wave out of this. That when we're done, it's going to look something just like this, but bigger. And then it's going to bleed down and hit all the stages of normal, the whole normal stages here, where it goes all the 5 waves up and then it gets complacent and then it starts to break down more and then, the anxiety and the all of these emotions start to be felt. That's when we'll start to see the whole chart manifest itself. After on a higher time frame, we get all of our legs up like we did here, and then we start to break down. Okay? Then we start to break down. And most of these coins are showing us that they have the strength to do something like that. They have the strength to pull off a move like that with a couple factors. You have Bitcoin that is, got more public attention. It's reaching that defiance stage, meaning that Bitcoin is sold down so much in this ramp area that it's in, that if it keeps popping up, the market will become optimistic about Bitcoin again. Okay? And then after the optimism become, the belief, the thrill, and euphoria come. So right now, Bitcoin is about here, in the sell-off point right here. We went through all of these emotions, had a nice rally up over the whole year and a half, and then it's battling right here, battling in this spot right here. But if this thing Bitcoin pops back up and keeps climbing, then it will change the sentiment in the market to optimism. People will start to become optimistic about Bitcoin again. Like, oh wow, it tried to get dumped below 1,000 several times, and it keeps bouncing back, and then so that emotion changes in the market. People become optimistic about it, and it climbs up a little bit more. Let's say Bitcoin gets to about 1,500, then people start to believe and say, oh wow, this thing really isn't going down. And then it starts to be on the news, and then people you can do a little Google Trends search, and it starts trending up in the public consciousness more, and then the thrill and euphoria come as the public and the herd starts to come. So we already have that attention on Bitcoin since here, and so that attention on Bitcoin since there has led into new market cap for a lot of these coins. Like a lot of these coins are getting resurrected now, and a lot more play in cryptocurrency as a whole, in general. A lot more play in cryptocurrency as a whole. So we're seeing that now. Okay, we're seeing that overflow of all the money that's been coming into Bitcoin lately. Ethereum's market cap went from 1 billion to like 4.6 billion just in a couple weeks. So these markets, as they've been awakened, they have the capability to do a move like this, but larger in here. Okay, they have the capability, and especially with cryptocurrency, that's why these things are manifesting so well, because we're not talking about just contracts, or we're not talking about foreign exchange price against another country's price. Where you might have some kind of economics things that could, and fundamental things that could sway the prices between two currencies. We're talking about cryptocurrencies here, which is like limited supply items, commodities. So this is manifesting itself so beautifully in this time right now, and that's why it's really like become a winning strategy to play this strategy right now and understand this wave and how they unfold right now, because it's going to manifest itself in cryptocurrency more than any other market because of the supply and demand. Okay, because of the supply and demand, meaning that more money that comes into this, if this thing gets another leg up like this, everybody's going to be talking about Monero. Monero is going to be, in other people's thoughts and meditations, and people in other people's chatter and their chats and all sorts of things all over the world. It's going to come more because people don't really notice things, okay, when they're down here, when they're down in this trowel of like basically depression, okay, down in here. People don't talk about stuff when they're down here. It's only when people don't talk about stuff when it's down in here. It's only when things start to come up here that they get the public's attention. Okay, so now Bitcoin is creeping up into these levels where it needs to hit optimism next, and that has brought a lot of interest, a lot of public interest, a lot of people noticing these cryptocurrencies again, a lot of them being awakened and starting new market cycles. And I mean, here's another example: is Namecoin. Okay, I don't know how long you guys have been in cryptocurrency or anything, but this coin is like one of the top 4 cryptocurrency coins from the beginning on BTCE. There was like Bitcoin, Litecoin, Namecoin, Peercoin. I think it was the other one, Feathercoin. Okay, and look, this thing has been resurrected. Okay, it broke this downtrend. It got a lot of volume that went into it. It did a 1 and a 2 move, and now it's gearing up for a number 3 move. Especially when you look at this daily strength. Okay, we got this nice daily strength that's climbing. It should make another wave up here, probably to about 140 or so in the next coming week or so. Okay, it's gearing up. And when we consult higher time frames, we see that as well. Okay, if this thing keeps gearing up and gets above this cloud and we get across to the 3-day, it's free. It's free to really start to try to make a new all-time high. Okay, we're looking at a lot of these charts now, guys, at the bottom. At the very bottom. Okay, the very bottom. This one here. Let's check our monthly. Same. Look. This is a really big indication right here, guys. Like when you look through the charts and you see stuff like this, when stuff is just downtrending, and then bang, a reversal candle, higher time frame stochastic RSI strength that shows you that if it's going to make a reversal move and try to make a new all-time high, this is what it needs to do it. It needs the market strength to be behind it on a higher time frame. It needs to be gassed up for a big journey, you know, and that's where we get our indication there with our stochastic RSI. So mostly all of these coins now have broken their downtrends and have initiated new market cycles. I mean, basically almost all. I mean, Ripple's a really good example. Here, broke it, downtrend, lots of volume going in. And this is one too that you know, has some fundamentals too, you know, like the whole Japanese banks using this thing and stuff like that. So that may be a lot of why we've seen the first push here pretty good. Like honestly, guys, I think that, you know, I haven't really said this publicly or to anybody just yet, but I think that Ripple could go all the way up to here, guys. It sounds crazy, but I think that Ripple, first stop for Ripple, if it gets on a tear, is going to be this 1.272. Okay, but if it really starts to get on a tear, there's, you know, it could really hit all these extensions in price, which sounds very crazy to think that Ripple could, you know, trade up in the, like, you know, 35,000 range, and it was at like 500 3 weeks ago. That's the way markets work, guys. Like they downtrend, they go through an uptrend here and people don't understand it and people try to sell it down, and then when it goes through a downtrend, people don't understand and they keep trying to buy it. But then when it breaks and it gets enough market strength behind it, it really has the potential to go, you know, to higher heights. So, you know, I'm not saying go FOMO buy, you know, Ripple today at these prices. You know, wait to get back in on the respective retracements, you know, on the lower time frames. But just understand that there's a bigger picture that's unfolding. I mean, this thing just basically hit, you know, disbelief, a little bit of a rally of disbelief. It just, and that's it. Look, that's exactly, you have to really think about how these emotions play out and how with the public consciousness. All right, like this is a perfect example how this thing just hit disbelief. Okay, I made this call back here at like 500, and when the price was at like 1200, I even put the chart on Twitter saying that it could go to 2500. Okay, but now, I mean, if you see, like, my notifications here are like at 17 right now because it's like people are in disbelief. Okay, the market's in, it can't rationalize that a move like that just happened. So then this is what happens. It paints the sentiment and the emotion of disbelief in the market. And so right now people, you know, are in disbelief that this whole rally happened. Okay? And then a lot of people will think, oh, this thing's just going to, you know, go back down to being crippled. You know, it was just a pump and dump or something. Well, I see a lot of you guys joining now. I don't know if there's a time change difference or something, because we're about to be done in 15 minutes. So yeah, I mean, I'll email you guys the video for the ones of you guys that are joining late. But yeah, so when the market does something like this, that's why it'll invoke that emotion of disbelief in everybody. Like, wow, I thought this thing was dead. You know, oh, what? It just, you know, hit 2,500. So that's what's going on. You know, and then it will, you know, retrace, but then it will start to keep marching itself up, you know, on the lower time frames, because it has this higher time frame strength behind the entire move. Okay, so there's certain pieces of the puzzle, and I'm really trying to break it down to you guys in like a month. You know, like basically like everything I've learned over all these years, what to do, what not to do, what to ignore, what to pay attention to. And, you know, it's basically, it's a crash course. You know, it's a crash course in understanding this. But some of the biggest pieces of the puzzle to put together are understanding the cycles that the market's gone through and the emotions that the traders are feeling in that, and how these emotions lead to these you know, these cycles happening. And then understanding that happens and unfolds in a market geometry that can be measured. Okay, like, we just discussed, this may turn into just a ramp and not be the part of a bigger wave, but you still could play those moves, and until you see that bigger picture unfolding, then it starts to put the a bigger piece of the puzzle together for you. Like for instance with Monero, this entire 1 and a 2 move it made right here, okay, this entire 1 and a 2 move it made right here was formed of all these little moves. Okay, but we understood that when Monero broke its market cycle and started a new, trend up, that this was going to happen in some way, shape, or form. Like this is going to do another impulse like this that's most likely going to be larger than this one, but we don't really know how it's going to play out. So that's what I say. You can play the investor strategy where you're just like, oh wow, this thing broke its market cycle. Let me buy a bunch of it and just hold it for months to come. Or you could say, hey, this thing broke its market cycle. Where can I get in here? Okay, let me get in here. All right, now let me get out here. That was 25, 30%. All right, let me get in here. Let me get out here. Let me get in here. This is 40% to here. Okay, let me buy this 50% retracement of this whole move or whatever and try to get a larger move out of here. So you can play the Elliott Wave theory moves as they unfold until you get to a point where you're expecting like an ABC retracement or something, and the B just keeps going. And then you're like, oh, whoa, okay. Let me throw out that whole idea that this move needs to do a retracement and look at a higher time frame and see how does that fit the Elliott Wave theory now. Because at some point it's going to defy. If there's going to be a continuation, at some point the market will defy your ABC retracement. And so that's why I always play the strategy where I'll buy this A point on the retracement when I see that 1, 2, 3, 4, 5 come and I see it do that first dump down to a good respective point, like where this A would be. And let's say that that's like 38% of the whole move or maybe 50% of the whole move. I'll buy that point. And then as soon as the price moves away from my entry, I'll cover myself with a break even stop loss. So that way, if I'm right, I'm cool. The market will just keep going and will continue up. Okay? But if I'm wrong and it's an ABC correction, then I just get stopped out at break even and I look to re-enter, most likely at a lower Fibonacci number, which is kind of what happened with XMR. Okay, it's actually exactly what happened with, sorry guys, my little ghost is there. Let's see, on the hourly. That's exactly what happened with XMR where, I bought that, whoops, didn't do it. I bought that retracement on the 38. But then as soon as it moved away from that point, I covered myself with a break-even stop loss. So that, I was covered either way, basically. Meaning that when the market sold down to right here, I bought this. Okay, basically, I bought this point right here. Oops, sorry, this point right here. Okay, I bought that point when the market sold down there. Right in here. Okay, bought this point. But as the price moved away, I covered it with a break-even stop. So that way, if it didn't continue and we really did get an ABC retracement out of it, I get stopped out. Now, you could see that coming early if you're watching the charts and take a little bit of profit off that move also. Okay? Or you could just play the whole thing where you're like, all right, well, let me buy here. And as it starts to get a little bit weak here, let me just take profit because if this is an ABC retracement, let me take profit. If it breaks and continues, I'll jump back in. There's understanding how the market's going to unfold really gives you a lot of options on how you would want to play it. Like you could really, because what happens is if you don't get the ABC retracement out of a move, then you're going to get a continuation. And so you'll know, like kind of like in this point right here, how this didn't continue down, it stopped and then it continued on. So that's what happened here. That's what happened here. Okay, I thought, okay, maybe we're going to continue here, so let me buy here. And then as we start going up, the market faded out, and I wasn't watching the charts on this time. I think it actually happened when I was asleep, and I get stopped out at break even. So what did I do? I lost a little bit of money on some trading fees, but then I got back in at the lower retracement mark right here at the 50%, and that's why I was telling you guys, 165, 175 to get back in Monero, because I got stopped out trying to buy it, like here on 185 on the first time. So just understanding the geometry of the market is going to give you a better idea of how to play it, because you don't know what the market's going to do until it does it. And then when it does it, you can say, oh, okay, and you can respond to it. You can respond to it better. So, sorry, let me get rid of the line. So yeah, right here, we had this, and if you buy right here, you're buying here because you think, okay, yeah, this could be a whole one leg that we did, and we might be getting a 2 here, and we're going to continue on and do a 3, which we are going to continue on and do a 3, it looks like. But it needed to do an ABC retracement of that entire move. So you just got to play it safe and say, okay, well, let me buy here. Let me put a stop at break even. Okay, I'm stopped out at break even. Let me look at the bigger picture. Okay, this looks like a good place to get in here on the 50% retracement instead. And if you really study the textbook example that it followed, it really did pull the whole fake people out, where it came down and it retraced to about here, and then it went to here again, and then it couldn't handle, and it dumped back down one more retracement level, and that's exactly how it did here. Came down to 38, went up, came down to 38 again, and then couldn't handle it, and then dumped back down to the 50% mark, and there it found its strength to start its third leg up. Okay, so you're going to be able to make more money and understand the impulsive side, okay, when in a bullish market, and the impulsive side on the bearish market. But like basically this entire move right here, that's the one you're really focusing on when you're saying, okay, there was an impulse, where can I get in? Okay, and when you look at this entire move, you can see the little moves that we got in on here, like 125. Plenty of opportunity to gain. But when the market starts to fizzle itself out, and you can see like this little point right here where the mouse is, well, after we count our waves up, that's our complacency point. Look at it. Because here we got 1, 2, 3, 4, 5, and then this little wave right here where the mouse is, well, that's our complacency point right here. The market got complacent, and then it had to drop down a little bit more, and then everybody who bought in that area, they start to get anxious. And then it drops down another level to like the 50% mark, and people just get dumped out, and they're in denial that that they're at a loss. Sorry guys, my faded in and out there. The joys of living in Costa Rica. So yeah, that's what we're looking for, guys. Is to play this structure for what it is, but understand. Like you can play this, like I said, 5-minute chart, hourly chart, 12-hour chart, or you look at the gold chart, and it's even we're seeing this on the monthly. So you just have to understand that as you play these waves in here, if you just broke a market structure in a long downtrend, that you're most likely just playing a sub-minute wave of a larger move, of a larger move to come. Okay, so you just kind of, like I said, there's no real guideline and graph that you can lay on every single market, and it's going to turn out exactly like you think every time. You just have to have an analysis and say, okay, like I'm expecting this to do an ABC retracement here. If it doesn't, it continues, then your ABC retracement was denied, and then you just look at the whole move in a larger time frame and how that would make sense to have not had that retracement there, and how that continuation makes sense if you look at the Elliott Wave structure in a larger time frame. Okay, because that's the hardest thing about this Elliott Wave theory, is that it's waves within waves within waves within waves. Okay, so we're gonna see this, like all these little moves that we played on Monero here on this leg, getting in here at like 125 on Monero and stuff. All this this little point right here, we only see them here on like the 15-minute through the hourly. But when you start to really look at where this thing is going, you don't even see them. All you see is the leg. Okay, all you see is the leg up that was formed on the 12-hour. And then you can start to see, oh, wait a minute, this thing looks like it held a retracement here, and now we're doing a larger 1 and a 2, and I'm getting ready to do a 3. Okay, so that's the biggest thing, is to not get lost in your waves in a sense. But if you kind of plot them out, you'll have more wins than gains. Honestly, you will. Because if you play this strategy, even when you're wrong most of the time because you bought, like this is my number one time I'm wrong, is I get back into the market too early here, thinking that it's a continuation point, and it winds up actually just being an ABC retracement, and then I get stopped out at break even. So it's not really a loss. I'd lose some trading fees, but I would rather take that place right there just in case it's going to continue, and then if I'm wrong, get stopped out with a small loss or some trading fees loss, than to have not taken the trade. Because even if I take the trade right here and I get stopped out, then I understand why I got stopped out, if that makes sense. Like I understand why I got stopped out, and I'm like, oh, okay, yeah, I understand why I got stopped out, but I'm not afraid to take the trade again. Like that's another factor too that a lot of people deal with is that um, when you start having bad trades, you become afraid to trade. All right, and it happened to me. Like I quit trading 2 times where I just like walked away, and then the third time that I quit, but like I didn't really like walk away. Like I quit, but I wanted to stay in it, but I was mentally scared to lose. So I really, it was not like the other 2 times I quit where I just walked away. I didn't even look at charts for like months and didn't even care and said, oh, trading's for losers and everybody just loses in trading and it's a gambling game. And then the third time I started to understand it, but I was too mentally, like psychologically torn up, I guess, from all the loss to have the confidence to trade. So when you understand, when you have a strategy and you can kind of go by like a guideline, then if you take a trade and you lose, you learn from that loss. You understand, oh, okay, I got in at a number A point and it wasn't a actual reversal point. Okay, but then you start practicing the strategy of protecting yourself at those points. Like I always protect my entries with a stop loss all the time, guys. Like whenever I give entries on the signals, they're usually pretty precise where I'm expecting to get filled without the price going too far lower. So meaning that as soon as you get filled and you have your position and the market goes in your favor, put a stop loss at break even. Like really, because the market does come back around. It does come back around. And a perfect example is how it came back around even on me here on Monero. It was holding that 38% flag for a while and then just dumped down one more retracement level, stopped me out of break even. But I wasn't afraid to take the trade. I didn't say, oh, that was a bad trade. It was just, misjudging the correction wave. It's going to happen. Like we don't have crystal balls here. We're not, 100% right all the time. So don't expect yourself to be 100% right all the time, guys. Like, just have more times that you're right and make them count. Honestly. And then your little losses, they'll just be like, whatever. They're just washed out by huge gains. So this is a really effective strategy. And just recognizing that in every time frame you're going to see it, and in every time frame all the same emotions are manifesting it. And it's basically the same emotions of not understanding the geometry of the market, not understanding the psychology of all the rest of the traders, and exercising impatience and lack of discipline. And like I said, when things are going up, I don't buy them when they're going up. I buy them when they're coming down, because I understand that they're going to go back up, and everybody else that's selling them down doesn't understand that. So to be able to make money here on this move, you have to do it when everybody else is losing their money. And that's really the only way that you're going to make money in this game where 90% of people lose, is to make money when they're losing. Like really, like focus on those points where the loss is going to happen and liquidations are going to happen, and all the people that that saw a number one high be made in the market and then didn't buy the retracement, and then they see a new leg coming up that breaks that number one high, and then they chase it and they don't take profit to number 3. You have to understand that number 4 serves its purpose to liquidate all those retail traders and all those break chasers and all the pattern traders. They're going to get liquidated when that number 4 comes back down. So that's your opportunity. When they lose, that's your opportunity to get in the market and gain, because you understand there's a bigger picture unfolding. There's a bigger market cycle. There's a bigger grand wave unfolding. There's a bigger emotional cycle that is unfolding. So putting all those pieces together will develop a really good trading strategy. And then on Monday, we're going to talk about our precise entries on these points using Fibonacci and the wonderful world of mathematics and Fibonacci and the universal numbers of growth and decline. Okay, so that's what we're going to get into on Monday, and I'll send you guys all copies of this recording once I get it. Now that I'm using my screen recorder, I have to process it in my computer and then upload it to YouTube with a private link, and I'm going to start doing that because through this program, I had no idea that it was recording such poor quality. So I apologize for the poor quality on the first couple of videos. I just saw they had a record button in here, so I was like, oh, cool, I'll record it so that way it's part of the platform. But we're going to have much better video with the YouTube links. So that's it, guys. Hope you enjoyed today's session, and there's a lot of opportunities to gain out there. So keep your entries safeguarded, and look to buy the dips on these markets that are trending up. Until Monday, have a great weekend, guys. Take care. Bye.